Should you invest money inside your RRSP, or should you instead put a lump sum on your mortgage? I've been getting this question all year long, likely because mortgage interest rates have been on the rise and the stock market still has not recovered since its December 2021 peak. As we get closer to the end of the year and you were likely maybe gonna hopefully get a bonus from work or a gift of money, or just maybe there's some money floating around, you may be asking yourself, where should I put this money? Inside my RRSP or on my mortgage? What makes the most sense? Now, typically, if you ask this question to someone, likely they will ask you, well, what's your mortgage interest rate and how much do you think you can earn on your investments? And although those are great questions to ask, there's still a few things you need to figure out. That's not the whole story. There's a few other things in the calculation you need to include. So that's why in this video, I'm going to show you the breakdown of how to actually answer that question with a fancy little tool that you can download and try out yourself. So really, we want to figure out how much are you going to save in interest on your mortgage, or how much are you going to earn from contributing to your RRSP. So let me show you how this RRSP or mortgage calculator works. And I've included a little example for you so you can just kind of try it out for yourself. So let's say you receive a bonus of $2,000 from work and you're wondering what you should do with it. Should you contribute it to your RRSP or make a lump sum payment onto your mortgage? You're paying 5% interest on your mortgage and you have a 25-year amortization period. Your marginal tax rate is 25%. So how do we figure this out? Very easy. So first, we are going to put in our lump sum that we would put onto your mortgage, which is $2,000. Our mortgage interest rate is 5%, and our amortization period is 25 years. So this means that if we put a lump sum of $2,000 onto our mortgage, we would save $2,500 in interest payments. Now we've got the RSP component. So we're going to put in that lump sum of $2,000. We're going to put in that marginal tax rate of 25%. And as you can see, it's populated some information here. It says that if you contribute $2,000 to your RRSP, you're going to be saving $500 because of the tax deduction that you will get. Now, the next thing that we're going to have to figure out is what is the return on our investment? So we're not just putting cash in our RRSP. That doesn't make sense. We are going to be investing that money. Now, let's pretend that we do not have a stomach for volatility. We have a very low risk tolerance. And so we want to be put into a portfolio that we predict will give us an annualized interest rate of 4%. Next, you have to determine how many years are you going to invest that money. And let's say we are going to invest that money for 21 years. So it looks like the return on that investment will give us $1,680. And the total amount that we've earned, so the return on that investment plus the tax savings, is $2,180. Now, the last thing we have to figure out is what do we predict our marginal tax rate will be in retirement? And let's say we think it's going to be 22%, so a little bit less than right now. So as you can see, it says the taxes owed on withdrawal is $479.60. What that means is once you choose to withdraw that money when you're retired at your 22% marginal tax rate, well, guess what? You have to pay taxes on that money. That's the whole point of an RRSP. It's not a tax-free account, it's a tax deferral account. That just means that you are deferring paying tax on that money into the future. And the future is now. And so you owe $479.60. If we take the amount that we have earned minus what we owe in taxes, we've actually only earned $1,700.40. So as you can see, we actually save more money contributing to our mortgage than contributing to our RRSP. Now, obviously things would look a lot different if we took on more risk in our investment portfolio. So for example, let's say we actually were in a more aggressive portfolio and earned an 8% annualized return. There you can see it makes way more sense to contribute to an RRSP. Now, obviously this calculator is not perfect because it is making a lot of assumptions in the future that may or may not be accurate. And it's also making the assumption that you're going to be paying a 5% interest rate on your mortgage for the entire 25 years of your mortgage, which is very unlikely. Still, this could be a very helpful tool for you to figure out what you should do if you did get, a windfall or a bonus from work and you have trouble making that decision. So I hope this was helpful. Make sure to download this calculator that I made so you can use it yourself and plug in your numbers and try out some different scenarios. And also, if you are interested in learning more about RRSPs and investing, you may also want to check out my Wealth Building Blueprint for Canadians course that goes very in depth about pretty much everything you need to know about investing as a Canadian, and also specifically how to become a passive investor like myself. So thank you so much for watching. Make sure to subscribe if you haven't already, and I will see you in my next video.